Hello again, options traders. Happy Wednesday, everybody. And I got a question from one of the traders in our group asking how to balance broken wing butterflies. So we've talked about broken wing butterflies in the past before, but we'll do a quick review of them. But what if you've got these unequal ratios, but you don't want them to have this broken wing effect? That's what we're talking about here. And there's a lot of reasons why you might want to do that. Depending on what's happening in the markets, you might want to hedge these or morph them somehow to bring them back into balance. So, how many contracts would you need? Well, it's a good question. There's a fairly simple way to figure it out. Let's go find out what it is. And as always, before we do, please be sure to click like and subscribe. It's greatly appreciated and helps to promote the channel. So let's do a quick review of a broken wing butterfly. The key here is that you will have unequal spacing between the strikes. So for instance, you might have the 100, 105, 120. Now normally, in kind of your normal butterfly, they would be equally spaced. So maybe 100, 105, 110, or 100, 110, 120. But in this case, we have 5 points of difference between the first two strikes and 15 points of difference between the second two. That's what's making it unbalanced and creates this broken wing effect. So the risk graph for this at expiration would look something like this. See, normally for a regular butterfly, this right wing over here would be in line with this left. It would be on that same level. But with a broken wing, it sits way down. And the reason for this should be fairly obvious. Remember, for a butterfly spread, a standard one, you're long the first and the second, and you're short two in the center. So if we're long one contract, just follow your graph. We're long that call. Once we hit the 105 strike here in the center, we're now short two calls. So if we were short just one, we would flatten out here as a vertical spread, but we're short an additional contract. So that's going to give us these negative deltas down here. But notice that we don't start to find a balancing point at 110. We don't have that third contract to bring us back into line here. We just keep falling and falling and falling until we hit 120, which is this strike. That's what's causing this right wing to sit so low. And the more distance we put between these, the lower that would sit over there on the right-hand side. Now, of course, we could put the break on the left as well. This is just to give you the idea of what a broken wing butterfly is. Now, if we have unequal strikes, we did a video not too long ago talking about the maximum value for that center strike. And this is another calculation you will typically do for broken wings. It can help you to figure out which strikes are relatively cheap and relatively expensive. So let's go back to the same broken wing butterfly. One thing that we're going to do is we will find out the distance between the second and third strikes. So 120 minus 105 is 15. Now the difference in the entire spread, 120 and 100, is 20. So if we take 15 divided by 20, that gives us 75%. So what we're saying is that of the total distance here between 100 and 120, 75% of that difference lies out here in these two strikes between the center and the right wing. Now we could also do a calculation, we don't really need to, but we could do the difference here, 100 and 105, which is 5, divided by 20, which would give us 25. The shorter answer is to say, once we know that that's 75% out here to the right, it's got to add up to 100, so we know that that's got to be 25%. So if you remember that the three-strike pricing rule said that if we take 75% of this call's price plus 25% of this call's price, whatever that market price might be, that the center strike must be less than or equal to that value. All right, so you can go back and review that if you want, but that's an important calculation many times for doing broken wings. It's a little bit of pricing theory, and that's what we know, that that center strike could never exceed that value. We'll look at an Excel spreadsheet here that'll make it a little bit clearer here in just a moment. But let's say that we didn't want this broken wing effect. We wanted to use these three strikes, but we wanted them to be at the same level on these wings like a traditional butterfly. All right, well, how would you balance that? Well, that's what this person's question was, and we're going to go back to those ratios. We're going to look at the distance between that second and third strike, which was 15 points out of 20. which was 75%. Remember the distance between the first two, 100 and 105, or 5 out of 20, was 25%. So it doesn't really matter. Pick whichever one you want, but just pick one of these ratios. Let's start with the top one. 75%. How could you write 75%? Well, simple way would be 3 over 4. And now what you're going to do is exactly what you would do for odds ratios. If you have a 75% chance of winning something, let's say at a coin flip, how much should you pay? That's what an odds ratio shows you. And what we're going to do is we're going to take this top number here, the numerator, and put it down below, and then we're going to add some number to make it equal this one. So 3 plus what would give us 4? Would be 1. So I can just rewrite this fraction as 3 over 3 plus 1. So do you see what I did here? I took this 3 and brought it down, and then said, what number do I need to add to it to give me that one? That denominator. So 3 over 3 plus 1 is 3 over 4. Those are your odds ratios right there. So if you have a 75% chance of winning, you would have to pay $3 to make $1. And that's what's going to balance out that equation. So we know that if you bought 3 contracts of the first strike and 1 contract of the last strike, your 2 wings, now we have to say we know that we need a net contract exposure of 0. So for long 4 contracts, you would have to be short 4 in the center. And that would exactly balance. Now we could get the same answer by going to the second fraction here, 5 over 20, and say 25% we could rewrite as 1 over 4. We do the same thing here. Take the 1, bring it down. 1 over 1 plus some number equals 4. So 1 over 1 plus 3, and there's our 3 to 1 ratio. So the thing that you have to keep in mind is that whichever side of the butterfly has the most spacing, that's going to get the least number of contracts. And whichever side has the least spacing, in this example, the difference between the 100 and 105 strikes, that's the one that you're going to have to buy 3 contracts of. And that'll make more sense in a moment. But that's the way we're going to balance them out. So let's jump over to an Excel spreadsheet and see how this works in practice. Okay, so here is our Excel spreadsheet, and I've got 3 different call strikes here. I've got the 100, 105, and 110. These are various stock prices at expiration. These are the values of each position, assuming these prices right here. Here's the number of contracts at each strike. So now I've got it in a 1 to 2 to 1 ratio, a standard butterfly. That means we're long 1 of the 100 calls, short 2 of the 105s, and long 1 of the 110. And if we are, we're going to get this risk graph right here. That's a standard butterfly. But watch what happens if we break one of the wings. Let's make this the 120 strike, which is what we saw in the example, and there we go. Now, if we go back to the 3-strike pricing rule, what's the maximum value for this center strike? Well, we go back to those calculations, and it's 6.75. Remember, we're going to take 75% of this value, 75% of 8, plus 25% of this value, and we're going to add those together. It comes up to 6.75. So if I make this contract 6.75, that becomes the maximum value for that strike. Now, why is that? Well, the reason is we can make this a balanced butterfly. So let's do that by what we looked at before, and let's do 3 contracts of the first one, right there, and 1 contract of this one. And remember, if we're long 4 contracts, we would have to be short 4 to balance them. So let's make that 4. And there we go. And you can see that these wings right here, on exactly 0. And that's because I've pushed this to the maximum price. Watch what happens if I make it 7. If I make it 7, we enter in arbitrage, where the entire risk graph is shifted above 0. So of course that can't happen. It would have to be something less than 6.75. All right, so that's that 3-strike pricing rule. So if we make it maybe 6, see, now we're into a debit. But notice how this left wing and the right wing are now balanced. Kind of looks like this point here is leaning a little bit left, and that's very typical of a broken wing butterfly where you have balanced them. Now, why you would want to do this is a whole separate set of discussions, but right now I just wanted to answer the question of how you would balance it. So let's try a different one. Let's go from 100, 105, 120. Let's make this 125. What's going to happen now? All right, so we get the broken wing out here. We also know that the center strike would have to be a maximum of $7. But how would we balance it? How many contracts would we need here? Well, we can see that we have 80% of the value between the second and third, 20% up here. So what was the rule? We need far more contracts up front because there's not a lot of space. We don't have a lot of deltas up here to make up for all the deltas we're going to be losing on this side. So go back to the rule. 80% is 8 over 10. So we rewrite that as 8 over 8 plus 2, or 8 to 2, or 4 to 1. So now I know this has to be 4 and 1. And if we're long 5 contracts, I would have to be short 5 here in the center. And there we go, and we have it balanced. And then we can go back to our 3-strike pricing rule to see that the maximum value the center strike could ever be is 7, because if we make that 7, we go to exactly 0. If we're something more than 7, let's say 750, we enter an arbitrage. And so we know that that has to be a maximum of 7. So those are some really good calculations you can use to help you with broken wing butterflies, and especially if you're trying to morph them into a balanced butterfly, but by using these strikes. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a Candlesticks and Technical Analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.